First, we start off with two sides to the trade war. First, top trade advisor Robert Lighthizer putting a big question mark on a potential deal between the U.S. and China. Take a listen.
Let me be clear. Much still needs to be done, both before an agreement is reached and, more importantly, after it is reached, if one is reached.
But on the flip side, Boeing, the poster child for the trade war in many ways, is flying high. In fact, shares are soaring to an all-time high today, taking off since the December lows, now up nearly 50%, adding almost $80 billion in market cap during that time frame. So what should investors believe? Which side is the true trade war tell? Guy.
The trade war tell. I think the true trade war tell is Mr. Lighthizer's, his comments today. I think it's going to get slow walked for quite some time. I've been in the camp that a deal's not going to get done anytime soon. I'm going to stay with it. And then you'll say to me, well, wait a second, Guy. Then how did Boeing go from $285 a month and a half ago to $425?
Anyway, answer your own question.
What was the question? So the answer is the following. The Fed bailed us out, number one, and then the market realized, wait a second, Boeing's not necessarily a China story. Boeing's a free cash flow story that we've talked about forever, and the valuation is reasonable. Now, has it gotten ahead of itself? Yeah, I think so, but I don't think Boeing is necessarily saying that a trade deal is about to get done.
I think it's more of a trade deal story than it is a free cash flow story. And I think that the way we overshot to the downside in December, we overshot to the upside now. So I think it's going to roll. I think the market is going to roll, and we're getting very close to that day.
See, I think Boeing is the ultimate non-cyclical, cyclical story. So I think Boeing, because of their order book. Well, and I know I need to explain myself. So Guy talked about they're going to have 17 to 17.5 billion in free cash flow in 2019. This was even better than expectations, which were already extremely high. Look at that order book. Look at the duopoly they have with Boeing, with Airbus, and ultimately you have a dynamic where I don't think you have any other place to go. I think if you look at China deliveries as the core red flag you would throw up there in a trade war, I think it's probably 6-7% of essentially their bottom line, and I don't get worried about that for a company that is executing on all cylinders. So I'm not going to tell you they won't be moved around by trade war headlines, but their core business, stay the course on Boeing. This company is worth owning.
And their peers in terms of their sector, I mean, that sector's been outperforming industrials, of course.
Yeah, and if you look at the industrials, I think part of the story here, Mel, is when you're looking at it, I agree on whomever's on the side of, hey, look, the trade war is the trade war. I think this is more of a cash flow story. And if you go around and see what's really moving right now, what's been performing? Technology. Well, what's technology? These guys are all free cash flow guys. You talk about Apple and Microsoft and all these various names. And then you start looking at some of the other areas in the industrials. You see the same type of thing. Tim mentioned $17 billion in free cash flow. We're talking huge numbers here, and the PE is still trading at something like a forward 18, something like that. So there's 60% commercial airlines. That's what they do. That's what they're putting out there. And I agree with you, Tim. I don't think they're as dependent on China as the rest of the world seems to think because of the oligopoly. China needs them more than they need China at this point.
No, you're the only person on this desk who thinks that Boeing's a trade war stock still.
Well, I do believe that that's where it started.
Are being affected by the trade war as well. Sorry.
I do believe that that's where it started. And I think you brought up industrials, right? That's the sector that they belong to. It's overbought on an RSI. So I think it's overextended. I don't think it's a terrible stock. Right. I think there's a hell of a lot of reasons why they rallied, but I do believe that they're overbought.
What's night? Thursday night, right? I love Thursday nights are the best.
The
next day is Friday. Yesterday we had a segment on, remember the double dog dare? Remember Christmas Story, Pete?
Sure.
Yeah.
Double dog downgrade.
Double dog. It went straight to double dog dare.
What are we doing
Caterpillar. He's talking about the Caterpillar downgrade.
UBS went from a buy to a sell. Now, if you had said to me, what is bigger tell, Boeing or the UBS downgrade yesterday, which is a different game, I know, I would have said, you know what, Mel, that's an excellent question.
The bigger tell on trade?
The bigger tell.
Okay.
The bigger tell on trade. And why is that? Because if UBS believes there's a trade deal about to be made, there's no way in God's green earth they would have gone from a buy to a sell in the second poster child.
There are separate issues. The analyst was calling out weakness around the world, regardless of a trade deal. Exactly. And so maybe some stocks are performing.
If you have Europe teetering on recession, and even if the trade deal gets done, isn't there a host of reasons why China growth has been lackluster, why it's been upper left to the lower right, as Dennis Gartman would say, but he'd say the reverse? There's a host of backdrops that's negative for the market.
Yeah.
So there are reasons already to be negative on certain on some of these stocks.
So I am of the view that if you look at the Chinese data for the first quarter and the fourth quarter, obviously there was two things at work. One, you had China that was already slowing going into the trade war. The Chinese authorities and policymakers, I think, were flat-footed by the trade war. I actually think that China, in the last 2 months, they've cut triple R's, they've stimulated their economy, they have more to go, and they're actually cutting taxes. And despite we don't want to hear this, January, the highest credit expansion in China in a long time. I think China's data has bottomed for the short run. I think Europe's data has bottomed for the short run as long as we get this deal. And so I don't think it's going to be great, Steve, but everyone has priced in the end of the world, and that is in a lot of these numbers already. I
think by the same token, you could say what Tim said and be 100% correct, and you could also say that we've also priced in 90 to 95% of a positive trade war deal. So you could sort of trade both of them, which is sort of offsetting for me. And I think the market has run so much into a trade deal getting done that it's actually a sell the news event.
Here's the question. Has the rest of the world priced in a trade war deal? Has China priced in a trade war deal? Has Europe priced in a trade war deal? Because arguably their markets might see a bigger boost, right, from a trade war resolution at this point.
So my view is absolutely not. And I would argue that also that China's markets, which I think by their own standards are crazy cheap right now, and we've had a lot of technical breakouts. I'm not saying China's a great story. We need to be clear about this. But relative to where people were pricing it, and I think for longer term people investing, you also have MSCI inclusion. You have a couple other dynamics that are just technical. You're going to see a lot of asset and passive flows going into China. Rest of the world, the DAX has been a disaster. You can make an argument that the DAX was most punished more than any other indice in the world by the trade war because they're the largest export economy relative to their GDP. And I actually would own Germany here as well.
I still think that is not priced in nearly to the level you're talking about, though, Steve. When I look
here
at this
in the U.S.
Here in the U.S. And I still think that China, quite honestly, the need for us is bigger than everybody sees to want to say. Everybody seems to think we need them. I still lean on the idea.
Need for us being U.S. I see what you did there.
Yes, exactly right. Us, U.S., yes. So, but what I like about that is I still think there's plenty of upside built in for us. I don't think it's as much priced in. I think that all the other elements have been priced in. And now, all of a sudden, you look at China. That, I think, puts us through that and puts us near the 3,000 level of the S&P 500.
Quickly, one of the reasons for the market or participants thinking China was going to cave is because their markets were performing so poorly. Down 33% at one point a month and a half ago. Those markets have come raging back. So if the markets have come back, maybe that gives them more resolve than we think. So I understand what Pete is saying, and they probably do need us more than we need them. With that said, I think the Chinese play the long game. We don't. I think they string us along.
So you, for a while, have said that a trade deal is going to be a sell the news event. Mm-hmm. What kind of selling do you think we'd see?
So I think the calculus has changed the same way that we saw the sell-off based on Powell in October, and we tested that February low. We got down to 23.46. The calculus has changed now. He's got super dovish. So I don't know if we retest the exact low, but maybe in the 2,500 range.
Exact low of December 24th.
23.50, 23.46. I think you can see something in the 2,500 range, somewhere between 25 and 25.50 would be a good enough test for me.